Casinos make billions of dollars a year with an edge of just 2.7%. Let that sink in. 2.7. That's not dominance, that's not certainty, that's barely better than a coin flip. And yet the lights stay on, the buildings get bigger, the house always wins. Now here's the uncomfortable part. If you're a trader, you probably have an edge that's equal to that or better. Your strategy works on paper. Your backtests look clean. Your setups make sense. So why is the casino profitable and you're not? It's not because they're smarter. It's not because their math is better. It's not because their edge is bigger. It's because they remove the most dangerous variable in the entire system. You. Every time you sit down to trade, you don't just bring your strategy. You bring fear. You bring boredom. You bring impatience. You bring hope. You bring the need to be right. You bring the need to feel something. And those emotions don't show up politely. They sabotage you quietly. You move a stop just a little. You size up because this one looks good. You skip a setup because the last one lost. You chase because price is running without you. You trade because you're bored, not because you're supposed to. None of this shows up in your backtest, but it shows up in your account balance. And this is why this topic matters right now. Markets are faster. Information is louder. Noise is everywhere. Everyone is watching everything all the time. The system rewards speed but punishes impulse. And most traders confuse the two. So let's slow this down. Let's talk about how the casino actually wins. And why copying that logic, not their games, changes everything. A casino does not care about any single spin of the wheel. They don't cheer when red hits. They don't panic when black shows up 5 times in a row. They don't change the rules because a customer is on a streak. They care about volume. They care about repetition. They care about executing the same rules forever. Roulette has a 2.7% house edge. That means, on average, the casino makes 2.7 cents for every dollar wagered. That's it. But they run that edge thousands of times per day. Across thousands of tables. Across millions of decisions. No emotion. No exceptions. No gut feeling. Just rules. Now contrast that with how most traders operate. You take one trade and it loses. Suddenly, you're questioning the system. You take another and it loses. Now you're being cautious. The third one shows up, a valid setup, and you skip it. That trade wins. Of course it does. Now you feel stupid. So you take the next one impulsively. That one loses. This isn't bad luck. This is probability being sabotaged by emotion. This is where mechanical systems come in. And no, not in the way most people think. A rules-based mechanical system is not about being robotic. It's about being consistent. It's a fully defined set of rules that answers every question before the trade exists. When do I enter? Where does the stop go? How much do I risk? Where do I take profit? How do I manage the trade? When do I do nothing? No interpretation. No discretion. No, this feels different. If conditions A, B, and C are met, you act. If they aren't, you don't. Period. This sounds boring. It sounds restrictive. It sounds like you're removing the art of trading. And you are. Because the art of trading is usually just emotion wearing a disguise. Here's the irony. Mechanical systems don't remove losses. They remove excuses. They don't guarantee profits. They guarantee consistency. And consistency is what allows an edge, even a small one, to actually exist in real life. Think about this. A system with a 55% win rate and a 2-to-1 reward-to-risk ratio is objectively profitable. But only if you take every trade. Only if you size correctly. Only if you don't interfere. Miss a few winners. Increase size on a loser. Move a stop once or twice. And the math collapses. This is why so many traders say, "My strategy works, I just can't follow it." That's not a discipline problem. That's a system design problem. Because discretionary systems ask too much from a human nervous system. Every decision drains energy. Every choice creates friction. Every moment invites emotion. Should I take this? Should I wait? Should I move the stop? Should I take profit early? By the time the trade is over, you're exhausted. Not because trading is hard. Because deciding is hard. Mechanical systems eliminate most of those decisions. You're not deciding in the heat of the moment. You already decided calmly before the trade existed. Now you're just executing. That emotional detachment changes everything. A losing trade doesn't feel personal. A drawdown doesn't feel like failure. It feels like variance. And that's a word most traders understand intellectually, but never emotionally. Here, where it gets uncomfortable. When you don't use a mechanical system, you can't actually improve. Because you don't know what went wrong. Did the system fail? Or did you fail the system? Without fixed rules, every trade is a one-off story. There's nothing to measure. Nothing to refine. Nothing to trust. With rules, accountability becomes brutally clear. If you followed the system and lost money, the system needs work. If you broke the rules and lost money, you need work. No confusion. No self-deception. And yes, sometimes you'll break the rules and win. That's the most dangerous outcome, because it trains you to distrust your own edge. Now let's talk about testing, the part almost everyone skips. Before a casino opens a game, the math is already done. They know the edge. They know the variance. They know the worst-case scenarios. Most traders do the opposite. They design a strategy. They eyeball a few charts. It looks good. And they go live. Then they're shocked when reality doesn't match imagination. Backtesting isn't about proving you're right. It's about discovering what you're signing up for. How many losses in a row are normal? What's the maximum drawdown? How long can the system go sideways? If you don't know these answers, every losing streak feels like the end. And that's when emotions take over. Here's the part nobody warns you about. Building a mechanical system is easy. Following it is brutal. Because even with rules, fear doesn't disappear. Greed doesn't vanish. The urge to interfere never goes away. What changes is awareness. You feel the urge, and you don't act on it. Early in my own trading, I ran a breakout system. Tested, verified, solid expectancy. The first 3 trades lost. I knew statistically this was normal. Emotionally, I was convinced I'd messed everything up. Every instinct told me to tweak something. Anything. I didn't. The 4th trade won. The 5th trade ran. By trade 20, the equity curve looked exactly like the backtest. Not because I was smart. Because I stayed out of the way. This is where most traders fail. They make exceptions. They system hop. They chase perfection. Every exception feels harmless. Until you realize you're no longer trading a system. You're trading feelings with rules sprinkled on top. And here's the paradox. Constraints create freedom. When everything is discretionary, you're trapped. By screens, by noise, by constant second-guessing. When rules are clear, you're free. Free to walk away. Free to stop watching every tick. Free to live your life. Trading becomes boring. And boring is exactly what you want. Because excitement is expensive. Adrenaline is costly. And drama is deadly to an equity curve. Professional trading is quiet, predictable, unemotional. It looks unimpressive until you zoom out. This is the long game. Losing traders think in single trades. Winning traders think in hundreds. One trade doesn't matter. One day doesn't matter. Even 1 month doesn't matter. Execution over time does. So here's the real question. If you already know your emotions sabotage you, if you already know your edge needs consistency, if you already know the casino model works, why are you still trying to outsmart probability instead of letting it work? Because at the end of the day, you're not competing against the market. You're competing against yourself, against your impulses, against your need for excitement, against your discomfort with boredom. The market will always offer opportunities. The question is whether you're disciplined enough to only take the ones you're supposed to, and whether you're strong enough to do nothing the rest of the time.